All right, welcome back to Hot Stocks. This one is certainly hot. Pull up the stock price of Forgings for our viewers. It is up 20% at 283, and why not? I think the numbers have been spectacular. Aside of the fact that they've clocked in 11 rupees EPS, the more important point is that the operational picture has expanded from 19%. The EBITDA margins have gone up to 22.7% in fact. Mr. Vidyashankar Krishnan, the MD who made this possible in the quarter for the company, joins us right now on the show. Good evening, Mr. Krishnan. Thanks for joining in. If you can hear me, it's been a splendid quarter for you, more so on the operational front. Is this a sign of things to come? Can you maintain these margins and therefore this operational beat for the next 3 quarters as well? We'll just get that going. But Forgings up 20%. Not bad going. The other management who will join us on the show is Atul Auto. So both of these stocks, auto component space, have done very well today. Can't really ask Sandeep about Forgings. It's locked on a 20% circuit. But what about Atul Auto, Sandeep? How does that look on the charts?
Well, Forging, I can say that it looks good for furthermore, but you can't enter now. In that sense, I'm not comfortable. Atul Auto, you can enter even now at 674, maybe down to 660. A little deep stop loss of a little below 640. You're taking a kind of a 5% stop loss. And I would talk of levels of 730, 740 over the next few weeks or possibly a couple of months. So very, very bullish. And this is a stock we have been liking from almost 460 levels is where we first recommended it. So I think this stock will be an outperformer and we will make new highs.
Okay, I think we do have Mr. Krishnan now. Mr. Krishnan, I was asking you about the kind of operational beat that has come in this quarter. Is this something that is sustainable?
Yeah, certainly. We see a strong market going ahead in terms of both exports and domestic. And existing customers as well as new customers have come to us with newer products. That is certainly adding to the portfolio of our production. And therefore, I think these numbers are indeed sustainable over the next few months, certainly.
So if I just extrapolate the EPS that we've seen in this quarter, which was around 11 rupees, do you think for the full year we could see a number close to 44, 45 or possibly even higher?
I think a number between 45 and 50 should be reasonable.
Okay. That's a strong growth that you're citing. Now tell us, what have been the contributors? You mentioned about export orders as well as domestic orders coming in. What are the nature of the client conversations? Are you expanding capacity or utilization to meet these higher orders? What's the game plan for the next 24 months?
We are in the midst of an expansion of about 150 crores, of which about 50 odd crores has been spent and another 100 crores remains to be spent. This is largely to cater to both export and domestic markets. We see growth in both because of newer products that we have developed, particularly in the domestic market, which has been actually languishing in its own terms. But our growth there has been significant.
So you said there's another 100 crore rupees worth of expansion to go through with. Sir, if you can give us an idea of what's the current...
which has been actually languishing in its own terms. But our growth there has been significant.
So you said there's another 100 crore rupees worth of expansion to go through with. Sir, if you can give us an idea of what's the current capacity, what are the current utilization levels, as well as how much capacity would this increased CapEx add to your numbers as well?
Last year we did an average of on an annual basis we did 32,500 tons of production as against a capacity of 40,000 tons, which translates to something around 80%. This year I think we are on target to close out upwards of 90. I would say anywhere around 100%. So we should be touching 4,000 tons, 40,000 tons of capacity this year, which based on the previous year's capacity would be 100%. However, we are adding capacity even as we speak. So I would expect this to reach in the region of around 46,000, 47,000 tons. I mean the installed capacity.
And you did mention that you will probably do a 90% capacity utilization for the consolidated capacity?
Yeah, on the at the end of the year, we should be looking at about 85 to 90%, and for this year, we should be reaching upwards of 40,000 tons.
So what does your top line look like? Because you've grown at around 25 or 26 odd % for the current quarter. What do you anticipate for the year as a whole, the top line? And more importantly, next year, if indeed the orders are of a long-term nature and the capacity utilization going up, what's the top line growth that you envisage for FY16 as well?
Based on the first quarter results, we have almost achieved around 125 crores. That translates to, on an annualized basis, a revenue in the region of 500 crores. I would say between 500 and 525 should be reasonable for FY15. Looking forward, FY16, markets holding, world economies holding, we should look at a number in the region of 600 crores.
Mr. Krishnan, since the overseas markets are a big contributor to your top line as well, can you tell us about what's the breakup in terms of the domestic business as well as the overseas business? And given the way the currency has also been moving, the Indian rupee has been very volatile, how are you dealing with this currency impact as well?
The breakup is roughly about 25% towards domestic, and the balance is exports. 75% is exports. So predominantly we are export driven. Having said that, the domestic markets also have grown even in this environment by 14% quarter on quarter, which I think is pretty reasonable. The export markets are based a lot linked to the dollar versus the rupee, and we have seen considerable weakness of the rupee in the last few months, and that I think is bound to sustain over the next year at least. Until strong FDI inflows, FDI comes into the country, I think we will see a slightly weaker rupee. Even as we speak, between a week ago and now, the rupee seems to have weakened slightly. From what our understanding is, there is a negative or a weakening bias to the rupee, but I don't expect too much of volatility there. I would expect the rupee to trade between 59.50 and 61.50. And we are happy so long as it stays there.
Just very quickly, you wouldn't need to raise any kind of equity funds over the next 12 months, right?
I don't think so. I don't think any equity is an issue right now. We are able to grow organically with internal accruals as well as some amount of debt here and there.
Really good having you, Mr. Krishnan. Thanks so much for taking the time out, and all the best. We'll of course touch base with you next quarter as well.
Thank you very much.
That's Forging. Splendid numbers, and it's showing in the stock really. More importantly, the management saying that they'll do an EPS of 45 to 50 rupees. That makes the stock trading at sub 6 times current year earnings, which even for a small auto component company in the current market situation is not too expensive. So if indeed they manage to do that, then certainly the stock is not expensive, and it's going up today on very good volumes. What's also going up today is Atul Auto.